Okay, so investing 101. Not exactly, the most thrilling title, is it?
Well, it doesn't exactly scream exciting, does it?
But what if we reframe it?
Okay.
What if we think of it as like unlocking a secret code
Ooh, I like
to
that.
financial freedom, right?
Yeah,
So today we're going deep on investing basics.
absolutely.
Even if you've never even thought about investing before.
Yeah, this is for beginners.
And we're using this awesome beginner's guide that breaks it all down.
Exactly. Simple and easy to understand.
So no jargon.
No.
No, assuming you already know a bunch of stuff.
Nope. Starting from scratch.
So I think a lot of people hear investing and they think, oh, that's for rich people. That's
Yeah.
for Wall Street.
Yeah, it's intimidating.
Yeah. But we're here to bust that myth.
Absolutely.
Investing is for anyone
Yes.
who wants to build a better future.
If you want to grow your money, you got to invest it.
Okay. So let's get to the big question.
Right.
Why invest at all? Why not just save money in a savings account?
Okay.
Isn't that enough?
So imagine you have $1,000 today, right?
Right.
If you put that in a savings account, even the best savings account,
Mm-hmm.
you're maybe going to get what?
Couple bucks.
A couple of bucks a year.
Yeah.
In 10 years, maybe you have $1,100.
Not much.
But if you invest that $1,000, you could potentially double, maybe even triple it.
Really?
Yeah, because of this thing called compound interest.
Okay, compound interest. That sounds kind of complicated.
It's actually not that complicated.
Okay.
So basically, you earn returns on your returns.
Returns on returns.
Yeah, so it's like a snowball.
Okay.
It just keeps getting bigger and bigger.
So it's not just the money I put in, it's the money that money makes.
Exactly.
And then that money makes more money.
Exactly.
Wow.
That's the power of compound interest.
So even if I start with just a little bit, it can grow a lot over time.
Yes, exactly.
That's pretty amazing. Okay, you've convinced me. Investing sounds pretty cool. Good.
But where do I even start?
So there are different types of investments, just like there are different types of food.
Okay.
You got to find what you like.
Okay.
First, we got stocks,
Okay.
also known as equities.
Equities, stocks.
Yeah, when you buy stock, you're basically buying a tiny little piece of a company.
So I'm like a mini owner.
Yeah, like a mini partner.
Okay.
So if the company does well, your investment grows.
Right. But what if they don't do so well?
Well, then your investment could lose value.
So it's a risk.
Yeah, stocks are generally considered higher risk.
A higher risk.
But they also have the potential for higher returns over time.
All right, risk and reward.
Exactly.
Okay. What about bonds?
Bonds are a little different.
Oh,
It's more like you're lending money to a company or the government.
so I'm the bank.
Yeah, you're like the bank.
Okay.
And they promise to pay you back with interest.
So it's more like a loan.
Yeah, exactly.
And are those safer than stocks? Generally, yes. Bonds are considered lower risk,
Lower risk.
but they also typically have lower returns.
Lower returns, gotcha. So less risky, but maybe not as much potential for growth.
Right.
Okay, I see. Now, what about those mutual funds
Mutual funds.
and ETFs? I hear those a lot.
Yeah, those are great. Those are all about diversification.
Diversification.
Yeah, you don't want to put all your eggs in one basket.
Right, right.
So with mutual funds and ETFs, you're basically buying a basket of stocks or bonds.
So it's like a team of investments
Exactly.
work together.
Yeah, so if one investment does poorly, hopefully the others will do well and kind of balance it out.
Okay. So it's like spreading the risk.
Exactly.
Okay, I like that. So that's stocks, bonds, mutual funds, ETFs. What else is there?
We've got real estate.
Real estate.
Yeah.
Yeah, that's something I understand.
So with real estate, you buy a property and it can generate rental income.
Right.
And hopefully the value of the property goes up over time.
So you're making money from the rent and from the property increasing in value.
Exactly.
Cool. Okay, now the big one. Cryptocurrency.
Ah, yes.
Crypto.
Is that something a beginner investor should even think about?
Well, it depends on how much risk you're willing to take.
So it's risky,
Yeah, crypto is very volatile.
volatile. So that means up and down a lot.
Yeah, like a roller coaster.
A roller coaster, okay.
So it could potentially make you a lot of money.
Or lose you a lot of money.
Exactly.
Okay, high risk, high reward. Got it.
Yeah, it's the wild west of investing.
So I'm seeing a lot of options here,
Yeah.
but how do I choose the right investments for me?
That's where diversification comes in.
Right.
You want a mix of different types of investments, like
Brilliant.
a balanced diet for your money.
Okay, a balanced portfolio.
Exactly.
And that leads to risk tolerance.
Right. Risk tolerance is all about how comfortable you are with the ups and downs of the market.
So some people are more comfortable with risk than others. Exactly. Some people are thrill seekers. Some people are more cautious.
Yeah.
And then there's time horizon.
Time horizon. What's that?
So that's how long you plan to invest your money.
Okay.
Like, are you saving for retirement, which is way down the road?
Right.
Or are you saving for a down payment on a house, which is maybe in a few years?
Yeah.
The longer your time horizon, the more risk you can usually take.
Makes sense. So if I'm investing for retirement, I can be a little more adventurous.
Yeah. You can ride that roller coaster a little bit.
Okay. And if I need the money sooner, I should be a little more cautious.
Exactly. Play it safe.
Got it. This is starting to make a lot of sense.
Good.
I'm actually feeling kind of excited about this.
That's great.
But I think I'm ready for a little break.
Okay.
We've covered a lot.
Yeah, we have.
We'll be back in a minute. Okay, so we talked about all these different investment types.
Right. Stocks, bonds, mutual funds, all that good stuff.
Yeah. And we talked about like diversification and risk tolerance.
Important stuff.
Yeah.
Got to understand that before you jump in.
Yeah, but I gotta be honest, I still feel kind of lost.
Yeah, I get it.
Like, where do I actually go
So there are a few different paths you could take.
to actually start investing?
Yeah. One option is to work with a financial advisor.
Okay. So I walk into like a fancy office.
Well, it's not always that glamorous.
Okay.
But basically, you're hiring a professional
Right.
to help you create a plan to manage your investments.
Okay. That sounds pretty helpful.
It can be, especially if you're, new to all this.
Yeah. But aren't financial advisors like really expensive?
They can be. It
Alright.
depends on the advisor.
Okay.
Some charge fees based on how much money they manage for you. Some charge an hourly rate.
Okay. So got to factor that in.
Right.
So maybe not the best option if I'm just starting out.
Well, if you're more of a DIY type, you can always open an online brokerage account.
Online brokerage account. So I can just do it all myself
Pretty much.
from my computer.
Yeah, you can buy and sell stocks, research investments, all from your couch.
That's amazing.
Yeah, it's really convenient.
But I'm picturing myself like staring at my computer screen, like completely clueless.
Well, don't worry. Most online brokerages offer lots of resources,
Okay.
like articles, tutorials, sometimes even like virtual courses.
To help you learn.
Yeah, to teach you the basics.
Okay, so I don't have to be an expert right away.
No, not at all.
Okay, that's good. And what about you mentioned index funds before?
Index funds.
Yeah. Are those good for beginners?
They can be.
Because they track the whole market, right?
Right. So you get instant diversification.
Okay, and that's important.
Yeah. And they're usually pretty low cost.
Okay, that's good too. So I can buy those through an online brokerage.
Yeah, definitely.
Okay, so that's two options. Financial advisor, online brokerage. Is there anything like in between?
There's this thing called a robo-advisor.
Robo-advisor. Like a robot.
Yeah, kinda. It's basically an automated investment platform.
Okay.
You answer some questions about your goals and your risk tolerance,
Right.
and then the robo-advisor creates a portfolio for you.
Like a personalized portfolio.
Yeah, based on your answers.
Okay, so it does the thinking for me.
In a way, yeah.
Okay, and is that expensive?
Usually they charge much lower fees than a human financial advisor.
Okay, so less expensive than a financial advisor, but more hands-off than an online brokerage account.
Exactly.
Okay, so I've got my three options. Financial advisor, online brokerage, robo-advisor. What now?
So once you choose your path, you need to decide what type of account you want to open.
Right, account types. We talked about that a little bit before.
Yeah. So
Right.
the most basic type is a taxable brokerage account.
Taxable brokerage account.
You put in money, you buy and sell investments.
Okay.
And any profits you make are taxed, just like regular income.
Okay, so that's where I'd put my stocks, my bonds, my mutual funds, all that.
Exactly.
Okay. What else is there?
Then you have retirement accounts.
Retirement accounts.
Right.
Like 401ks and IRAs.
Okay, yeah, I hear those all the time, but I always get them mixed up.
So 401ks are employer-sponsored plans.
Okay,
You contribute money from your paycheck before taxes are taken out.
so pre-tax dollars.
Yeah.
Okay.
And a lot of times, your employer will match some of your contributions.
Really?
Yeah, so it's like free money.
Free money, love that.
Yeah.
But what if my employer doesn't offer a 401k?
Or what if you want to save even more?
Yeah.
That's where IRAs come in.
IRA.
Individual retirement accounts.
Right.
You can open one on your own.
Okay,
Doesn't matter if you have a 401k or not.
got it. So more flexibility with IRAs.
Yeah, exactly.
And both of those come in like two flavors.
Right. traditional and Roth.
Okay, so traditional versus Roth, what's the difference?
With traditional, your contributions are tax deductible.
Okay.
So you lower your taxes now,
Right.
but you pay taxes when you withdraw the money in retirement. Okay, so I'm saving on taxes now.
Exactly. Okay, and Roth
Roth is the opposite. You pay taxes on your contributions now,
right now.
but then your withdrawals in retirement are tax-free.
Tax-free. That's
Ah.
amazing. Okay, so which one's better?
It depends on your individual situation.
Okay, so got to figure that out.
Right.
Okay, so I've picked my path. I've picked my account.
Okay.
Do I need a ton of money to get started?
Not at all. That's a big myth.
Okay, good.
You can start small.
Okay.
A lot of online brokerages and robo-advisors have really low minimums.
So, like, I can start with just a little bit.
Yeah, sometimes even just a few dollars.
Okay. I'm feeling a little overwhelmed.
Yeah.
Any advice for making this a little easier?
One tip, automate your investments.
Automate.
Yes, set up automatic contributions from your checking account.
So, like, every month it just automatically transfers.
Exactly.
Okay.
That way you don't even have to think about it.
Out of sight, out of mind.
Exactly.
Okay. That's smart.
Yeah.
How do I choose what to invest in? Well, remember those index funds we talked about?
Yeah, the ones that track the market.
Right. Those are a great place to start.
Okay.
They're diversified and low cost.
Right, okay.
And then you want to make sure you have some bonds in your portfolio too.
Right, for balance.
Exactly.
And are there, like, bond index funds, too?
Yeah, there are bond index funds that track different bond markets.
So I don't have to pick individual bonds?
Yep, you could just buy the whole basket.
Okay, that's helpful. Now what about real estate?
Real estate.
Yeah, we talked about that. Is that something I should be investing in right away?
Well, it can be a good investment,
Yeah.
but it's a little more complicated than stocks and bonds.
Okay.
It often requires more money upfront,
Right.
and it can be harder to sell quickly if you need the money.
Okay, so maybe not right away.
Maybe not right away.
Okay.
Yeah.
What about all those, like, fancy investments?
You mean like hedge funds, private equity, commodities?
Yeah, those.
I would say, as a beginner, stick to the basics. Stocks, bonds, maybe some real estate later on.
Okay, those other things are more for, like, the pros.
Exactly.
Okay. And cryptocurrencies, should I be getting into that?
Crypto is very volatile.
Right, we talked about that. The roller coaster.
Yeah. It could be a very exciting ride,
Yeah.
but it could also be very risky, especially for a beginner.
Okay, so maybe not for me right now.
Right. Stick to the basics.
Okay. So we've talked about a lot of different ways to invest. Any final tips for building a good portfolio?
Keep it simple.
Okay.
Diversify,
Right.
manage your risk,
Right.
and be patient.
Be patient. Yeah. Okay, this is a lot of information to process.
It is.
I'm feeling a little overwhelmed.
That's normal,
Okay, good.
but I think you're getting it.
I think so. I'm actually feeling more confident.
That's what we like to hear.
Yeah.
So before we move on to talking about some common investing mistakes, maybe we should just pause for a second
Okay.
and just sort of reflect on what we've talked about so far. Okay. What are your key takeaways?
Okay, let me think. I think the biggest one is that investing doesn't have to be scary.
Right.
It's not just for, like, financial experts. Because anyone can do it.
Absolutely.
And I'm actually feeling kind of excited about the possibility of making my money grow,
Yeah.
even if I'm just starting with a little bit.
That's the spirit.
Yeah.
And remember, there are resources out there.
Right.
You don't have to do this alone.
Okay, that's good to know.
So you ready to talk about those mistakes?
Yeah, let's dive into those.
Yeah.
All right, so investing mistakes. Let's talk about those. Like, what are some of the biggest pitfalls to watch out for?
Well, one that trips up a lot of people is trying to time the market.
Oh, yeah, like buy low, sell high. Right?
Yeah, exactly. Sounds easy in theory,
Yeah.
but in practice, it's almost impossible to do consistently.
Really?
Yeah, like even professional investors, with all their fancy algorithms,
Right.
they get it wrong all the time.
So, like, no one can really predict the market.
Nope.
It's too unpredictable. So if I'm trying to, like, jump in and out, trying to, buy at the perfect moment and sell at the perfect moment.
We're probably going to end up losing money.
Ouch.
Yeah.
So what should I do instead?
Focus on time in the market, not timing the market.
Okay, time in the market.
Yeah.
So, like, buy and hold.
Essentially, yeah. Choose good investments, diversify your portfolio,
Right.
and then just let it ride.
Even when things get, like, a little scary.
Especially when things get scary.
Okay.
That's when people make the biggest mistakes. They panic, they sell everything,
Right.
and then they miss out on the rebound.
Okay. So, like, just ride the waves.
Yeah, like surfing.
Okay, that's a good analogy. So time the market. Got it. What else? What other mistakes do people make?
Another big one is overlooking fees.
Fees?
Yeah.
Like what kind of fees?
Well, there are fees associated with like mutual funds, ETFs.
Okay.
Even your brokerage account might have fees.
And those can really add up.
Oh, yeah. Over time, they can eat into your returns big time.
So like even if it's just a small percentage.
Even a small percentage can make a big difference. It's like death by 1,000 cuts.
Wow. That's a pretty vivid image. Okay, so I got to watch out for those fees. Um, what else?
Another common mistake is failing to rebalance your portfolio.
Rebalance. What's that?
So remember how we talked about diversification?
Yeah, like stocks, bonds, the whole balanced meal thing.
Exactly. But over time, that balance can shift.
Okay.
Like maybe your stocks do really well.
Right.
And suddenly they make up a much bigger portion of your portfolio than you originally planned.
Okay. And that's bad.
Well, it can be. It means you're taking on more risk than you intended.
Ah, okay. So rebalancing is like adjusting things.
Exactly. You basically sell some of your winners
Okay.
and buy more of your losers.
To get back to that balance.
Yeah, to get back to your target allocation.
Okay. So rebalance. Got it. What else? What other mistakes do people make?
A lot of people ignore their financial plan.
You mean like they don't have one?
Or they have one, but they don't stick to it.
Okay.
It's like having a map, but then just wandering off in the woods.
Right. So it's important to like create a plan and actually follow it.
Exactly. Figure out your goals,
Right.
your risk tolerance, your time horizon,
Okay.
and then make a plan and stick to it.
Got it. Okay.
Of course, life happens.
Yeah.
Things change.
Right.
So you might need to adjust your plan along the way.
Okay. So like check in with it every once in a while.
Yeah, review it at least once a year. Make sure it still makes sense for you.
Okay. That makes sense. So don't just like set it and forget it.
Right. Your financial plan should evolve with you.
Oh, okay. This is really helpful. I'm feeling a lot more confident about this whole investing thing.
That's great.
Yeah.
That's what we want to hear.
So we've talked about the basics of investing, the different types of investments, the different paths you can take, and some common mistakes to avoid. What are your final thoughts?
Well, I would say the most important thing is to just get started.
Yeah.
Don't be afraid to take that first step.
Okay.
Even if you start small, the important thing is to start.
Start investing, start learning.
Exactly. And remember, it's a marathon, not a sprint.
Right.
Be patient, be consistent,
Yeah.
and you'll be amazed at what you can achieve over time.
Okay. That's really inspiring. Thanks for all the great advice. I think this has been a really helpful deep dive.
I hope so.
And I hope our listeners feel more confident and empowered to take control of their financial futures.
Me too.
So to everyone listening, thanks for joining us. We'll see you on the next deep dive.